Hey everybody, good morning. How's it going? Let's kick it off. Let's see. Can I start a poll? Here we go. Yay. There. Start the poll. There we go. Hey everybody. So we got General Rush, Ivan, Serge, Andrew, Will, Hugh, Be Like Water, Ted, Craig, Ed, Rob, Ronger, Chris, Rob, Marianne, Sledge. Good to see everybody this morning. Thought I saw Goose in the house. Mother Goose, you here, buddy? Welcome to all my channel members and my subscribers, of course. Can't forget those. Hartnett was out there sowing the seeds of $6,000 gold on the Flow Show report from the weekend. That's interesting. It didn't hold the name that I gave the document. That's cool. Gosh, love it. All right. Hard to find the tab you're looking for when the name changes. Anyway. Such is live, right? I don't have any staff. It's just me. And can't make the magic happen like TV. It's just kind of the way it works. So, anyway. Welcome to today. As you know, the universe has a funny way of telling everybody that the trend is going mainstream. And it's not when the front page of the Wall Street Journal has it. It's not when some analyst in a suit starts yelling about it on TV. Nah, the real sign is when you get that phone call. You know, from that person you know, maybe a brother-in-law, maybe a sister-in-law, maybe a good friend, great people, terrible investors, call you up, tell you, I mean, you can immediately hear the panic in their voice, right? Said, so my wine investments, they're tanking. First off, who the devil invests in wine, right? I mean, maybe for the rich and famous. I mean, hey, if you plan on drinking away the losses, right? Sounds like a terrible Tuesday night, maybe bunch of headache, but not a portfolio strategy, not a retirement strategy, but I digress from there. So on goes this person, should I buy physical gold? Should I buy silver? Is it too late? This reminds me of my mom about a year ago. And I get these kind of questions too. That's kind of the sign, right? Terrible investment people, when they're ready to buy gold and silver. I mean, it's a FOMO, right? Something's brewing. But here's the thing. For once, they might be actually onto something with this gold and silver stuff. They're asking the right questions, even if it's for the wrong reasons, because what's happening in the gold market right now, well, it's turning out to not just be another little rally. We're seeing tectonic shifts. I mentioned this yesterday, and while the mainstream is just waking up, the smart money has already been moving. Look at the tape. For this week in October 2025, gold casually smashed through 4,100 an ounce. For those of you keeping score at home, that's 56% this year alone. It took just 36 days to go from 3,500 to 4,000. 36 days. That's a pretty fast move in gold terms. $500 higher. So what's happening while gold is having this moment in the sun? Well, just last Friday, we saw the crypto apocalypse. I mean, a tweet from the president kind of kicked it all off, and we saw just some massive chaos. I talked about that yesterday. If you missed it, should go watch yesterday. I talked about it. You should go watch the interview from Jody too. Like, if you missed that yesterday, I have a link to her stuff in the description, both yesterday and today. If check her out. She's fascinating. She was a bank trader, currency trader, and they used Elliott Wave, so gives legitimacy to what I do. Anyway, what's happening in gold? Well, saw that a crypto apocalypse. I mean, we vaporized $20 billion in leveraged positions. Poof, digital gold. Poof, right? Turns out not so digital gold when $20 billion just poofs off the radar, and the whole thing's not even worth, gosh, a couple trillion versus nearly 28 trillion in physical gold. It's a big market difference. Meanwhile, this actual physical stuff you can stub your toe on, gold, just keeps going up. It's almost like in a world of uncertainty, people prefer an asset that's been a store of value for 5,000 years over a string of code named after a dog, Doge. And, well, so what's happening? Why now? Well, the big fancy term is currency debasement. That's kind of what's going on globally. For those of you that didn't major in economics or finance, the polite way, this is kind of the polite way for those nerdy folks in that realm to say the government is printing money and they don't know what they're doing. They're basically making the dollars worth nothing every time they make more, and every time they fire up the printing press, just to fund another whatever pencil purchase. I mean, the brilliant government, maybe they're bailing out another failing bank. I mean, the geniuses up there in Washington, but it's global. Like, all the governments are doing it. The plan for the U.S. is just to do it slower than everybody else, so that we maintain our world reserve status. It sounds like a great plan, right? We're staring down the barrel of even more uncertainty. We've got a new Fed chair potentially coming up next May. Trump has been very adamant that Jerome Powell's out. He's kind of lining up the replacements like a game of duck hunt. And the candidates being flouted are, well, not exactly known for their love of tight money supply. So, fire up the printer, baby. The market is betting on a boom. We're talking about bubble type policies that can push this thing to ridiculous levels. This isn't a new story. This is a playbook as old as time. And this is where it gets really interesting. The big brains at Bank of America, our buddy Michael Hartnett, he's pointing out that history repeats. We're taking, talking heads have been talking about this gold reevaluation. So we're taking the gold that we've got and we're going to put a different price tag on it. This happened before in history. It happened back in 1934. President Roosevelt, in the midst of the Great Depression, basically said, you know what? The dollar is now worthless. He changed the price of gold with a swipe of the pen. Went from $20 to $35 an ounce, 69% jump, just like that. And then in the 70s, Nixon did it again, effectively ending the gold standard and letting the price run free. Hartnett's team looked at the last 4 major gold bull runs. On average, the price jumped 300% over 43 months. If that historical pattern holds, we're not just thinking gold runs up a little bit higher, and not just like 4,500, not just like 5,000. We're looking at the potential for $6,000 an ounce by next spring when we get that new Fed chair. Think about that for a minute. From here, it's a potential 50% jump higher. And the craziest part of all this is almost nobody actually owns gold. According to Bank of America's own data, their private clients only have about 0.5% of their total assets in gold. The big institutions, this is kind of shocking. The big institutions out there only have about 2.3% exposure to gold. The retail crowd, just starting to barely dip their toe in. Institutional money, the pension funds, the endowments, they're not in the pool. Now, if they decide to jump in, 6,000 could look a lot less crazy, right? There's a whole nother bizarre signal flashing red on the dashboard, though. The relationship between gold and oil, I've shown this off before. 2 years ago, 1 ounce of gold would buy you about 15 barrels of oil. Today, that same ounce of gold, 60 barrels of oil. Oil priced in gold, crazy. Oil has never been this cheap relative to gold. Right now, it's a historical anomaly. Hartnett thinks that oil could even drop to $50 a barrel. I wonder if one of his analysts or interns listens to this show. Good for your gas tank, potentially, but massive flashing sign that the value of real things being repriced in gold. Well, we'll see what happens. So what's the move here? How do you play this? Of course, I'm not offering any kind of financial advice. It's more like financial entertainment. ETFs are an easy, attainable way. If you think buying a slice of a giant, professionally guarded pile of gold, well, it's paper gold. You don't have to worry about storing it or insuring it or buying it or selling it. GLD is the easiest way. It's liquid. You can buy some shares. It tracks the price of gold pretty closely, pretty tightly. And for a lot of people, that's the easiest way to go. Second, physical gold, coins, bars. Serge in the chat, he's got the lockdown on this. And for the true believers, this might be the way to go. I mean, you go put it in a safe. You're responsible for the security of it. The problems, it can be stolen. I mean, it's an asset with no counterparty risk. Nobody's going to print more of it. You might dig more out of the ground, but you're not going to print more. And a third way to play, you have gold miners, right? These companies, they dig the stuff out of the ground. They got amazing profit margins at these kind of prices. And if prices go up another 50%, profits probably go up 30% or more. But it's a riskier play. You're not just betting on gold, you're betting on a company's ability to manage the costs, operations, get it out of the ground, get it to the market, actually make some money doing it. It's high risk, high reward type of stuff. And what about silver? Well, that's where it gets crazy. Silver is like gold's hyperactive little brother. It's more volatile. It's already hit all-time highs. Well, it's working on it. And it's made an even bigger move. Hartnett notes that, it might be a little too hot right now. When a bull says something about something being too hot, maybe you should listen. Hartnett, he's already bullish on the sector, but he's saying silver might need to chill out just a little bit. So the financial system is built on confidence, and right now confidence is potentially eroding in the full faith in government, full faith and credit of governments around the world. We have a stock market at all-time highs, but propped up by a handful of tech giants who just keep going higher. We have a bond market that's supposed to be the safe haven, but it's being eaten alive by inflation. And we have a crypto market that's just proved you can lose a decade's worth of savings in an afternoon. And in a world that's gone a bit mad, owning a piece of sanity and a piece, basically a piece of history might be the smartest move you could possibly make. Or you could just go invest in wine, maybe some whiskey, drink the sorrows away. So anyway, that's the monologue for today. I hope you enjoyed it. And let's see. Start a poll. Did you enjoy today's breakdown on gold? Start the poll. And jumping over here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. And this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you want somebody to tell you what buttons to push, hire and consult a financial advisor. Be careful out there. And yeah. So earnings season really starting to pick up starting tomorrow. A lot of financial earnings start hitting tomorrow. Should get interesting. We've got Tesla coming up next week. We've got most of big tech hitting the last week. So this party is going to start getting earnings driven pretty quickly. And what fun it will be. So government's still shut down. If it reopens, we might see these CPI numbers. If we don't, we're punting it. Still punting. And 29th is the next FOMC day. So we're basically 2 weeks away. 2 weeks away. The government shut down. This data-driven Fed kind of on free float, right? What are they going to do? No jobs reports, no data. Who knows? If and when we get a little, taking a step back, somebody might have said something yesterday about potential for a dead cat bounce. Well, maybe that someone drew an arrow on the chart right there. Kind of funny how this works. So we had most people enjoyed let's see, do our normal poll. Green SPX by the end of the day. Start another poll. Only 25 voters on the last one. Come on, everybody. Participate. Participation sport. The more you participate, the better the show. And reminder, at 5 p.m. today, I do my 30 Minutes of Awesome show. It's the only show during the week that I do where I take your requests for at least 30 minutes. Usually it's an hour and a half. So that's coming up at 5 p.m. But I do need to go to my son's birthday dinner. I no longer have a teenager. Crazy, right? After, gosh, how many years has it been, Kimberly? We've had a teenager. Now we have none. We've had teenagers for a long time. Now we are out of the teenager business. Getting old. Only as old as you feel. So looking for this to hold right here. If we can hold that, potential to go higher. Break back above the highs yesterday. And ramp it up. Minimum target would be right up here, about 6,800. The bigger targets out to new all-time highs. Up here around 6,850, 6,880. Yeah, 6,900 even. So this potential, this 1, 2, sitting in here. That would be the 3, 4, 5 could take us up into 7,000. And then I would be wrong on my prediction about below 4 before above 7. Darn, I missed one after all these years. I get stuff wrong all the time. So be careful out there, everybody. We're going to see what happens. The immediate level to watch is right here, 66.76. And you'd be like, well, that's futures. How do I don't know how to do futures. This is futures if you didn't know, and ES1 exclamation point on TradingView. It's /ES on most trading platforms /ES. And why look at that instead of this? Well, looky. What did I talk about yesterday? We could make a lower low on the cash while just doing a 618 retrace on the futures. Funny how that might happen. It's as if I have seen this story before. So this very well may make a lower low right here. And then we go on higher because the futures already have this bullish setup in place. Isn't that crazy how this works? Let me know in the chat if you think that's like the prophecy was foretold yesterday morning. Oh man. Sometimes I know what's going to happen even if I don't do the trades that would profit from it. It's kind of funny that way. So NASDAQ has the same sort of setup cooking here. 618 retrace. And we'll see if we can bounce from there. Russell, kind of the same thing. All three indexes got the same pattern cooking. Hey, good looking. What you got cooking? This one has a little more room to the downside, but potential to bounce. ABC, beautiful. This one's cleaner than the other ones, I feel like. So ES, I was talking about the ABC potential. Actually labeled the wrong point here yesterday. Goes back to this one. I moved the fib line. Didn't mean to move that. This was the B. So this was the A right here. That was the A. This was the B. And this was a 1, 2. And we had a 3, 4, 5 potential. But maybe this was the 4. And this is the 5. But I don't know. We'll see. That's futures for you. Could be complete when you dive down in here. The way this all worked. 1, 2, 2 was slow, 3, 4, 4 was fast, and 5 flushed out into the end of the day with a 1, 2, 3, 4, 5 on the 5th. So that's possible complete into that low. We saw a lot of divergence down here too. So be careful. Be careful. Now, one I don't usually put on the chart. This right here. Basically got to this extreme level, especially on the 1 hour chart right here. We bottomed out pretty drastically on the 1 hour chart, which is where reversals can be born from many times. Roll back over here. So we hit the same kind of levels back here at -30. Yeah, maxed out. It's kind of where we max out. That was back from April when we're going to do a strong reversal, and we kind of did that on Friday. Same kind of general vicinity on the chart. So this is a divergence right here. This is showing that this move down today is not as strong. Imagine that as what we saw Friday. So this can be a reversal. Maybe like, well, I didn't know how you read MACD. Well, there you go. I don't use it. Like, I don't put it on my chart very often because I just kind of can tell. Like, I'm already at the point where I don't have to see it to know what we're doing. And the one Jody likes, she was talking about yesterday. She briefly mentioned this. Awesome oscillator. It's a MACD tuned for Elliott wave. And we're getting that same kind of divergence here. So anyway, that's the main indexes for you. Looky, looky, looky. Getting closer and closer. We're like tiptoeing down. Doop, doop, doop. This can, this has got a nested setup for a quick drop down here in the low 50s, if not 250. Then we might spark a hot war in the Middle East yet again. Gold. See what we got. We got a lot of fibs on here. Well, creeping up in that 42 zone that I talked about. Really close. Rejecting pretty hard today. Didn't do that retrace. That's good. So this is going to retrace at some point. The more straight up this goes, the more violent that retrace will be. If this just goes like this, we'll come back down pretty violently. Pretty violently. I've seen a lot of people talking about the standard deviation on gold. We're poking out the third standard deviation away from the roadmap line right now. Today. I've been riding it for a couple days. So be careful. This either, last time we did this, poking out the third standard deviation, we went into a consolidation that lasted like that. We very quickly came back into the one standard deviation, and then we couldn't muster any strength to go higher. That took us from April through August. So May, June, July, August. 4 months of just sideways consolidation. You can say what you want to, like, oh, there's no slowing this thing down, but it's very easy that we see another 4 months of consolidation. Maybe a little pullback. Could be a big pullback. So just be careful. That's getting a little cooked. Bitcoin coming back down. Bitcoin. So here's the caution. I thought this might need another dip back to a lower low. It didn't look complete. And this move, 1, 2, 3, that was an ABC. Absolutely beautiful correction higher. And trend resumes and we make a lower low. Let's turn this off. That's a lot of lines. So that's what we got cooking right here. This to me looks like 1, 2, 3, 4. And as long as we stayed underneath that level, 5 is coming down here. How far down? That's a good question. Might tag 100, might dip slightly under 100,000. Ethereum. Now this one a little different because this has a potential 5 up in place. 1, 2, 3, 4, 5. And we're working on the retrace. There's no level that we have to hold above except the low. We could come all the way back down right near the low and it still stay in place. But the 618 retrace is right down here around 3760 on this all-time history. I'm just using TradingView's all-time history. If you wonder which exchange I'm on, it's TradingView's all-time history for both of these. NKD. Yesterday we were rocking. Today we're rolling. A little bit of chop here. Looks like a first move up. Oh, look at that spike. There. Pulling back. Let's dive in, look at a little lower time frame, see what we got cooking. Unclear. Not a clear 5 whip, not a clear anything. That's like a bounce and a rip and a rip. That's what you get when you go exponential, though. Like, if gold does that, you can expect this kind of thing right there. So the levels we'll watch at this point for this global liquidity indicator back down around 46.4. We need that to hold and push us higher again, break back above this, and then we'll be looking at the bigger targets up around 50, 60, 50, 55,000, maybe 60,000. Right now we topped out at 49,025. I look at this as a global liquidity indicator, NKD1 exclamation point. What is it? It's the Japanese stock market. As this thing rips higher, usually the U.S. market goes with it. As the thing rips lower, usually we have problems in the U.S. markets. Just it's not causation. It's just correlation, roughly. Dollar hit the roadmap line. Look at that, and stopped. Been sitting here for 4 days. If we can get through, that opens the door to come on up to 102. If we get above 102, that's where chaos in this market might start. Right now, we just have one overlapping move up off the lows. And it looks nested like 1, 2, 1, 2, 1, possibly 3, 4, 5. So we may be able to, this 1, 2, 1, 2, 3, 4, 5, 4, 5. We may be able to get up in this area, possibly up to 102. Then we may do a 618 retrace before we pop it through if we're going to go higher. All right, looking at the Mag 7s. Well, Apple still being soft. Amazon, here's the warning. Below the roadmap line, as I've talked about. Even for those that didn't think it could happen, here it goes. If this escalates, it could be right down here. Google. Watch for this to retest the breakouts. Do have support right in there. Come down, hold it. We can go on up to the upside target around 265. Meta. Watch this one like you watched Amazon. Get below that. Going deeper. Could be mid 500s. If not, retest the bottom again. Microsoft doing the pattern. So this one still has potential to come right down here, retest the breakouts. Right in that zone. It's funny how all the patterns are working like I've talked about for 2 months. Now they're all doing it. NVIDIA still on the struggle bus, trying to get the momentum to go tag that 1618 up there. May need to dip back in here and retest the breakouts. And a little more pessimism today. Almost 50-50 on green by the end of the day. Tesla. Wow, look at that volatility. Now rip down, close here, gap up, run up, gap back down, pushing lower. I mean, this is just volatility. Good for the premiums. This still set. I mean, we're basically retesting this into earnings. We drop on down a little bit. Earnings may be a boom. Shakalaka. So it'll be earnings is always a story of how we did do and how we're gonna do. How we're gonna do with no tax credit, not so good. Probably not looking super great for the next 3 quarters, maybe 4. Elon already warned about that, but they got stuff in the works. How they did do for this last quarter, really good. Set records. So, and it wasn't just cars, it was, energy products too. So they did a lot of big things. We'll see how that plays out. I'll look more at it as we get into next week near the earnings for Tesla. Netflix, well, came up and hit our head right on that 618. May need a 618 retrace of that move up. And we'll see what happens. Stuff's not really magic here. Not really magic. This low, this high. Here's the support right back down here. If we can hold that, it sets up the break above here and here and here. To me, this would be the buying point again. If you already got in here, that was a point to get to potentially book profits. If you missed it, well, you can wait through the next cycle. This is kind of a longer term play potentially. This could take several months to play out. And this one took several months to play out. We saw this drop coming. I was like, it's gonna hit the roadmap line, and then it bounced up, and we hit that 618 right there. I was like, oh, that's the resistance. And then it took another few weeks to get down here. We finally hit, bounced pretty violently, but we'll probably do a retrace before we set up the bigger move up. This could be well out. I mean, we could be well into next year before we get up here in the target area. You can see how it played out before. And we did get some volatility right at the beginning there. This one's been a little less volatile, but you drop back in here and then shoot up higher. Doesn't have to happen. Nothing ever has to happen. Like that's just a typical pattern that shows up over and over and over. And when it does, it gives me a higher conviction to trading it when these things fit the patterns. And that's what I was talking about yesterday on HIMS, in case anybody missed it, is that this thing has like this nested up move up, retrace, move up, retrace, move up, retrace, with the higher lows all the way up through here, higher highs coming up through here. And we have this bigger upside potential cooking that could shoot this thing up, like another 56% or something. Now, that doesn't negate getting another pullback to the roadmap line. So, downside risks, absolutely. DPZ bouncing, that's crazy. Domino's has a pattern to get down in here. 1, 2, 1. You see it right here. 1, 2, 1, 2, 3, 4, 3, 4. Probably going to do something like that. Could be well into next year. Goose, if you're around, check it out, man. It's finally doing the thing. I just couldn't hold on that long. I needed that cash freed up for other opportunities. Yeah, standard 3 and wide just didn't have a great price that was competitive with the Bolt, as Rongemer says. So it's just kind of the way it works, I guess. Let's see. Would you ride in a self-driving taxi? I'm not even saying Tesla. I'm just saying self-driving taxi, Waymo, all the other brands. Would you ride in a self-driving taxi? Let me know your thoughts. It's kind of Tesla's big. I feel like they're going to push it out hard next year and try to cover the quarters that are weak on car sales. So we'll see what happens. But Waymo, is already out there in a couple dozen cities. So, and my truck drove me here today. I didn't hardly touch anything. So it's a technology that's further along than most people think. And I don't even have the newest version. They say the newest version is just like having a person driving you around. I should get it in the next week or 3. MP, probably cruising on up here. We did tag the 96, so be careful. That could invite another consolidation before we pop on higher. Here's another one. Trump grabbing a piece of, I guess. U.S. rare earths. AMD showing strength in a weak day. This has real potential. I've had this on the chart for a long time. This to outperform NVIDIA. And Jack and I talked about it yesterday during the show. This has large upside potential. Didn't do the pullback I wanted. Did a little baby pullback, which maybe that's more bullish. I don't know. Hasn't actually broken out and confirmed the breakout yet, but it's cooking right there. So this could double or triple pretty quickly. Polaris. Maybe the consumer's recovering a little bit, but that's a rough chart for Polaris. No retrace. I'm a trend pullback continuation trader. Trend is down, and this would be a pullback so far. The trend could resume down. So I don't get involved in that until I see some sort of retrace that holds, and then we set up a new trend. That's what I'm looking for. Right there. T-Mobile. Ooh, right back down. Rejected off the 618. So that's a caution. We reject like that. Watch out. This can take another leg lower. This is the kind of lesson here. Like, you got to be careful. This can push it right down into this area right here. Is it 10 o'clock already? Gotta be. All these alerts. Dun, dun, dun. Yep, 10:01. Wow. Well, everybody, let's take a look at a few of the decliners. List was huge. Goldman Sachs coming on down to the roadmap line. Morgan Stanley coming on down to the roadmap line. Bank of America coming on down to the roadmap line. JP Morgan coming on down to the roadmap line. It's too predictable. Wells Fargo popping a little bit, but oh, it already hit. Huh. So this one already hit. Watch out for the next run higher. Bust on through. Some earnings today. Arm there, hitting the target on the last bounce. Beautiful. Watch out for this to roll, though. Right back down to the room up line. That's only 3 waves up so far. Potentially, without diving deeper. S-bit, horrible chart. VXX, UVXY. Let's check on this. So I did bail on UVXY on Friday. That seemed like a good point to get out right there. Then that happened yesterday. I did not buy more. I'm not sure this is going to be a popper at the moment. So checking out VIX. See what we got cooking. This could escalate on VIX. We did make a higher high today at some point. Let's see how played out this looks on the smaller time frame. Let's see. More data. So we did not on the futures. This is VIX futures. We did not make a higher high. More complete data set. This is starting to look a little bit nested up here. Got to move up. We got to retrace. Got to move up. Got to retrace. Where's the highest one? There it is. Lowest one. That actually hit where I would expect it to for this one right here. For a bullish move. Do we actually get a pop on up here? Or was that it? So we've got this one back here. Interesting. Now, the one thing I don't like, this is futures and it is allowed on futures, but those two kind of overlap. Not great. And if this just makes a lower high, then this was just a big A, B, C, and we're going to come back down. That's kind of what I was counting on. I'll add my UVXY back on when we're back down in here. You can count any instrument in the market. And when they're all kind of coalescing around the same theme, that's where I get the conviction to do the bigger, when I push more chips into certain trades. So when they all coalesce around the same kind of pattern. So that's what I got to be careful. That's what I watch out for. Coin coming back down. So this is the question, right? This is the question I've had for a long time. Do we finally make that lower low? Or is this just a 618 retrace and we set up that breakout to new all-time highs on coin? This would be a big major indicator what's about to unfold in the crypto market. If we can hold this vicinity right here and go higher, it's very bullish, and Bitcoin and Ethereum probably going higher. Carvana, be careful. This thing is cruising on air. No big pullbacks in here. Cruise back up to all-time highs. We can go back down just as fast again. And let's see, any other opportunities in here? QQQ sucking it up. Appreciate that. And Shopify. I made a big trade on Shopify a couple of years back. No opportunity presented recently. KTOS going exponential. Brought a few setups today. Let's see. PLCO. Zoomer up Buttercup. There's the low. Here's the high. Right there. Closed above the 618 there and looking for 1584 on the target. Cold was another one. This is a, be careful, this is an ultra short on natural gas. Leverage ticker on natural gas. But 42 is the target, and NG1 exclamation points. Does look like we're going lower. That's a 3 up and probably going to go down. If we can break, got put the uptrend on the lows, but uptrend on the lows. we'll break through that, probably coming down in here. Maybe all the way down to $2. Right there. What was the third setup? For some reason, it's jumped off the list. Let's see. Daily chart setups. Third chart was Best Buy. Must be up in the list up here somewhere. Best Buy. So we had the high, we had the low. Popped up yesterday, closed 80 on the target. It's not really going much anywhere big, but $4 upside right there. And bias for the day. Let's come back up here, take a look, see. Ooh, did we get a lower low? Did we do it? That could be it. That could be the bounce. Oh man, that's so close. The low 655.07, 65. Oh man, $5. Missed the low by $5. Well, that could be a bounce. At close counts, and this could rip us right up here. We could be up here by the end of the day. Ciao, everybody. Be careful. Things get spicy. Things get spicy. We could actually have a green close, so we'll see. Thanks for voting. Thanks for participating. Remember, 5 p.m. Eastern, we'll be back. 30 minutes of awesome. Have a great day, everybody. See you tomorrow.